Hello guys, welcome back to another video, and in this one I will show you exactly how to avoid fake market structure shift and how to anticipate the right ones. Before we do start the video, I just want to kindly ask you to subscribe to my YouTube channel and join my Discord with the link below in the description. And now let's go into the video. Guys, make sure to watch till the end because every single element I mention in this video is very important. So the first thing you need to see is, did we take any liquidity, did we rebalance any inefficiency, or did we trade into any PD array? If we did, then this is the valid place to look for market structure shift. Otherwise, you should ignore any break of structures or market structure shift that form because there's no context built behind them, right? So right here, you can see I have an example right here. We took liquidity, which is the first step. The short-term high being broken, traded through, and then this is the valid point that we should look for a market structure shift, right? If you don't take liquidity, then there's no need and you shouldn't look for a shift there because the market is not delivered to the upside. Took liquidity, rebounds, and inefficiency, and it's going to do that and then go lower. So you're going to get trapped in if you are impatient and not waiting for the perfect conditions. So the first thing, we need liquidity sweep. Now the next thing, what we need is a short-term low being formed if we take buy side, and short-term high being formed if we take sell side. This is the bearish example, and we took buy side liquidity. I'm gonna mark this, and you can see we have a short-term low being formed. So this is where we anticipate a market structure shift, because what market structure shift really is, when market is going up, it's in a buy program. When we break a short-term low, we see that market is now entering a sell program and it's looking to rebalance an inefficiency, or it's going to the sell side liquidity if we are looking for sells. Again, the complete opposite is for buys, and if we take sell side liquidity, it may be a little bit complicated right here, but stay with me. This low isn't relevant. Why? It was after we made a new one. Why? Because we traded above the liquidity and we formed a new low right here. This was relevant before we created this one. We expect this one to be taken, but then we create this one, market break structure. Now, what you need to look for is displacement. What is displacement in the first place? Displacement is a big, energetic, and sharp move in the direction you should be anticipating. And what do you look for in displacement is, you can enter from fair value gap, you can enter from order block. We are not going to talk about that. We're only going to talk about the market structure shift. So the most high probability market structure shift is when we show a displacement breaking it. Now this can be intermediate term low. It can be intermediate term low, which increases the high probability even more. What is intermediate term low? It's basically a low that either rebalance an inefficiency or has two short-term lows on the either side of it. We take liquidity, we have a low, and now we have displacement. Now I'm going pretty fast, so you may want to watch this video twice, but there's no problem. It's gonna be as short as possible. So we see big candle going downside, and then we see this candle continue. So this is officially displacement. Now I personally would enter from this fair value gap, but as I said, you can enter from any PD array or entry model you have, or either being OTE, fair value gap, order block entry, or breaker block entry itself. And now let's look at the second example. Okay, and I'm gonna use replay mode for that to make it even more realistic. So we see here we take buy side liquidity, and it's in our time zone. We're not going to talk about the time zones, time windows and sessions either, because as I said, it's only focusing on market structure shift. We take buy side liquidity. Where's the most recent low to be swept, to be broken to the downside, to showing us that there's actually a shift in market forming right now. It would be this low. So we mark it out, and we see what price did do it. So we take more liquidity and we form this low. So this would be our new market structure shift. We do sweep it with displacement, but you see how we go up, we reject it, we come below, we reject it immediately, which shows no displacement, right? The candle closed like decent, but there's no displacement below this low, because after we came up, we displaced basically to the upside, not to the downside, because there's a huge wick. So we don't count this as market structure shift. Okay, let's see if we go lower. When you higher, receive even more liquidity. So this is a full market structure shift. I'm gonna just mark it out. This is a false. MSS is short for market structure shift. So now we have new low, and now look, there's gonna be a right one. This is hindsight, but this is how you should learn. So we take buy side liquidity, Even here, you have low broken, no displacement, so no valid entry. It was an intermediate term low. As you can see, we fill this imbalance right here, but there's no displacement, which is playing a crucial role in this pattern or or delivery of the market algorithm. So let's see if we get displacement. We go even higher, so going to above those buy stops. We're going lower. You see displacement, big candle. You see how this candle is closing bigger than this one, and it's actually going below. Let's see if it goes below. It goes even below. So this is a valid market structure shift, and it's the right one. Valid MSS. And this is how you should trade it. That's how I'm also trading it. Sometimes you get it wrong, sometimes you don't. But even if you get it wrong, you know you follow your rules, you follow your plan, you know what is right. And sometimes algorithm just doesn't deliver how you expect it to. It's not going to be 100% win rate. So we see price continue. Now let's see if it returns. It returns to this zone, which is a lot of entries. There's old block, there's fair value gap, there's breaker block, and then it continues lower. And I'm not going to talk about times, as I said, but this is the right market structure shift right here. It's not this one, as I said, no displacement. We took liquidity, but no displacement, and then we move up, and this is the right market structure shift. Now let's look at one more example, and then we'll end the video, because as I said, you may watch this a couple times, and I want to make it as short as possible. Okay, so this is the third and last example for this video, and in this part, I'm actually going to give you one more thing that is crucial, and most of you guys don't actually understand, and that's why I told you to watch the whole video. If you made it, good job, you're going to hear that. So what internet tells you is you have to see a candle close above the short-term low if you're selling, and candle close above the short-term high if you're buying, and that's not true. That's absolutely not true. Price can wick. There's displacement if it wicks, guys. Like I can't see it here, but if even it wicks and it displaces below, it's displacement. Not in the example we see a wick going and then rejecting. If it's displacing below it with a wick breaking a swing, then it's valid market structure shift as well. This is just the thing you guys don't incorporate in your trading, and the internet just teaches wrong things. I'm teaching exactly what I learned from ICT, and everything I learned for free from ICT YouTube channel. We have a swing low right here, which is our current market structure shift right here. Oops, not this one. So current market structure shift, we put a line. We take buy sell liquidity. We are in AM direct session. As I said, we're not going to focus on times. I'm just going to focus on swing lows and market structure shifts. In this example, swing lows. So we go lower. We take more buy sell liquidity, which is an indication that we look for if there's a new low form, and it is. So this is a market structure shift right now. We update it because this is the old one. We sweep more liquidity and we create a new low. And we go higher. Let's see if it gets broken. So right now we have more liquidity swept. There's not much, but there is liquidity, and we have a new swing low or short-term low. So there's new market structure shift. Let's see if it get broken. We do get broken. There is some displacement because there's also a fair value gap. There's some displacement. There's a wick. Now you can enter from the order block, you can enter from the breaker block, you can enter from a fair value gap. As I said, whichever you want. I'm not going to teach you entry models. This is going to be a whole new video about ICT entry models, but in this video I'm only going to make you focus on market structure shift. We show more displacement. Now this is the real displacement, and we tag into the order block, tag into the breaker block and a fair value gap, and we continue lower, which shows that this was actually the market structure shift. Now why not this one? Because this one is the significant, right? You have to study, you have to learn. Now this could also be counted as a market structure shift. Depends on what you see, but I would say this is a market structure shift because it's got a really nice delivery after it, and it's got broken with displacement. Displacement is the most important thing, remember. And thank you so much for watching the video, guys. I hope you learned something. If you don't understand anything, I'll be answering all the comments in the comment section. Stay safe, good luck, and see you in the next video. Goodbye.